What's up, everybody? We're going to be starting here in about 4 minutes at 5 p.m. What's up, Lecky? 5 p.m. Eastern here with Chief Market Strategist, lead trader at the Stock Picks Inner Circle chat room. You guys already know him. And if you don't know, you're about to know very soon here. In a couple of minutes, we'll get it started, folks. All right, all right. Everybody, welcome to the session here. We have Aaron in the house. What's going on, Andrew? Billy O'Bones, Hazel, Luigi, Paul, Steve's in the house. Okay, folks. So we're gonna have here in pretty much shortly here, Chief Market Strategist at Miller Tabak, lead trader from the Stock Picks Inner Circle chat room, Matt Maley. I know that a lot of you guys know Matt from the live room, but he's gonna be here with us today. So just a couple things we will be going over. That would be trade ideas, options educations, setups, current market discussions. We're going to have pretty much all that stuff set up, and we're going to, bring it all to you here really shortly here. As soon as we get Matt here, good to go there on the back. In the meantime, in the chat, let me know what you guys are trading. All right, folks, we're gonna start this here really quick. Just getting some the camera and everything there set up with Matt there, folks. We're about to get started here. All right, folks. Just got off the phone with Matt. Had some technical issues. He'll be here in about 2 minutes, but we're gonna have this thing rolling. What's up, Kimberly? Lecky. So make sure that you keep your tickers at the end. We will be going over some trade ideas from the viewers today, right? So in the chat, go ahead before we get this started here. Go ahead and put a 1 in the chat if this is your first time here, and put a 2 in the chat if you've already been here. That way, we're gonna know pretty much where to take the conversation here. If you guys are familiar with Matt, if you're not familiar with Matt, and if you're new to options, like we definitely are gonna talk about options here, trading, volatile options. We definitely, that's all that Matt trades. That's all that he trades. So I know he recently clocked in some 200% gainers on some puts and bought calls. I think it was the same day on the dip, and made some good money with that. Okay, a lot of 1s here, a couple of 2s. Craig, what's going on? Dorothy, it's always a couple of regulars here. Deborah, good to see you here. Yeah, so Jonas in the house also. Let's go ahead and just kind of get everything ready here. All right, still a lot of 1s coming in. All right, put a 3 in the chat if you're new to options. If you're totally new, 100% new to options, if this is your first time looking at options, or, put a 4 if you're already kind of experienced, right? Because we will be talking about a lot of options today, specifically calls and puts, and short-term expiration, right? Near-term, short-term expiration. This is really what Matt focuses on. He's been in Wall Street for about 40 years, chief market strategist at Miller Tabak. Before that, director, oh, there we go. We got Matt in the house. Let's go ahead and give a big shout out here for Matt working it out there. Let's go.
I apologize profusely. Been crazy, as you might imagine, a crazy couple of weeks and months and days. And today was another crazy one. So I'm sorry for jumping on a little late here. But glad to be here, Rodrigo. Going to be another great session and a crazy market, but a very, very profitable one for those who
right.
who can play it correctly.
And yeah, so we pretty much, there's a lot of new people here, Matt, but and we are going to show them really, before we do get into anything, Matt Maley, chief market strategist at Miller Tabak. A lot of you guys familiar with Matt from CNBC or Bloomberg. He's there all the time. And also prior to being a chief market strategist, director of trading at Merrill Lynch, and also trading as well there for Solomon Brothers there. And that was really the most important trade desk back in those early 80s, right? So Matt, you've been doing this from the early 80s. You do have a lot of experience. It's not your first recession or your first market crash, obviously, right?
Right. Yeah. So I've been seeing a lot of cycles. There's no question. And so I'm sorry. I'm just making sure I get my Bloomberg started here and growing. But anyway, yeah, it's I have a unique background. I mean, I'm sure a lot of you see me on CNBC or Bloomberg. In fact, I'll be on CNBC tomorrow in the 1 o'clock hour. I don't know the exact time, but it's sometime between 1 and 2 o'clock with Brian Sullivan, and we'll be talking about some of the earnings that are coming up tomorrow night with Tesla and IBM and some of these other companies. But anyway, but the whole point about what I've done is that, I worked on a trade desk. I'm a strategist, but most of the strategists on Wall Street are former, are former analysts, and nothing wrong with that, or a former economist, nothing wrong with that. But that tends to be much more in the way of theoretical stuff. And one thing we've learned, and it's funny, one of the things that we really work hard on in the chat room here with the Benzinga chat room, my chat room, is that we get we learn a lot of different things. One of the things we learn is that the market frequently doesn't do what the fundamentals say they should do on a short-term basis. Okay, they can do something.
Hey, Matt, I think you're muted, man. You muted the computer.
Sorry about that. I'm all set. Sorry about that. That was my fault again. You all set now, Rodrigo? Am I back on? Good. Sorry about that. So anyway, yeah. So what I look at is, and what I try to focus on, helping people learn what's going on, but also to teach them that so many of these things that are supposed to happen, what should happen, don't necessarily happen, especially if you're a short-term trader. We all want to have that long-term portfolio, a bucket, bigger bucket of those long-term investment ideas that 3, 5, 10, 20 years out. But if you're one of those who really wants to maximize the returns and be a more active trader, we really have to look about what really moves the markets on a more short-term basis. I mean, as I've always said a million times, the market is not always right. You'll hear it all the time on Wall Street. The market's always right. That's ridiculous. The market is only always right eventually. Okay. A million times. Was the market right at the top in 2000 with all the technology stocks through the roof? Of course not. Was it right at the bottom in 2003 or 2009? Of course not. Was it right at the top just before we ran into the pandemic? Everybody right. Saw what was going on with the pandemic. Nobody wanted to believe it. The market was dead wrong, and the market fell out of bed. And so my point is that we see so many different times where people come in to me and say, Matt, you're looking for this or you're looking for that. It doesn't make any sense. How could that be happening if this and that is happening? How could you think that the currency market is going to move here in a big way with all the negative news is out? And I'll say, because everybody is betting that it will continue to be negative. All the bets, all of the positions are on one side of the boat. Everybody's bearish. Everybody's got short that thing. There's nobody left to short it. So it has to go up, even if it's only on a short-term basis. And that's kind of what we're looking at right now with the stock market trying to bounce back. And these kind of things present unbelievable opportunities in both directions. And that's what we love working on in the chat room.
Right. And for the folks that are asking, yeah, this is pretty much the live room where Matt is pretty much posting entries and exits. Matt, if you can share your Bloomberg, and also for the folks that are new here, just don't feel overwhelmed, because Matt is only doing basic buying calls, buying puts. This is the simplest type of trade in options, where pretty much anybody can do those types of trades. It's nothing iron condors, butterflies, nothing like that. Yeah. So, and also you get, also, by the way, I need to announce this. I don't know if you knew, Matt, but we already have now push notifications on your phone. So as long as you download the Benzinga app, you log in, you have your account there, you're going to be getting a push notification on your phone as soon as Matt will post something on his chat room.
Just on the trade room, or
the place where you post, only you post, because there's two. There's one where everybody posts. There's one where only you post. So where you post, all those alerts are going to go to people that have the app, and obviously have the push notifications on. So
perfect. Yeah, that's great, because we do. It's one of the things, we're in the chat room all day long, and we've got dozens and dozens and dozens of posts by me and many other people, but we do have this separate room where I want to do a trade, and sometimes I'll just post something that I think is really important. Some news that just came out, I'll post that as well. But mostly it's just a trade. So if you're off doing something, whether it be at work or taking your kids to school, whatever it happened to be, and you come back and you say, well, geez, I see, I don't have to go and try to filter through a gazillion different posts on the chat room. You can go right to the special page. And now that, as Rodrigo just mentioned, you'll get an alert to tell you that I've just put one out. So, and again, we definitely do put those trades in the post. In other words, I say, hey, I think the market's really going to do this, or I think Apple Computer is really going to do that. So you ought to think about buying some calls. No, I say, hey, this is what I think is going to happen in Apple. You ought to buy the calls that expire on this date with this strike price. And obviously, I'll tell you whether it's a put or a call that we're buying. And then when we just want to sell them, hey, we're going to sell them right here, take the profit. Sometimes we take a loss. We certainly, if anybody tells you they make a gain on every trade, they're lying through their teeth. And the whole idea is to make, obviously you have a lot more winners than losers. And that's what we've done very, very well in the chat room. But the point is that we give you entry points, exit points, and when we do them, and we let them let you know immediately. So it's not like I make a sale and then walk away for 2 hours and then tell everybody I made a sale. No, you know about it when I do it. So that's what we again. And the other thing about the chat room is that not only do I give you those picks. And the entry and exit points, but why? Why are you buying this? I mean, we set it up. Hey, I'm looking at this. I'm looking at that. This is the reason why I want to buy it, so that you know what's going on. Not only that, you'll learn from it. And so we really work hard on those types of situations. We don't want to just help people make money. We want to people help them learn about what goes on the marketplace, because there's so many weird things that happen.
Right.
And I've been doing this almost 40 years next month, and I like to share that knowledge, because some of it is very, very counterintuitive. Not all that hard, but counterintuitive. And once you learn it, it makes it much easier to understand what the heck we're doing.
Absolutely there, Matt. And really, if you do have some time, definitely would love to get into that. I don't know what day last week it was that you sold some puts and then bought calls the same day. And so, because a lot of people really don't understand the concept that the stock market can go up and down. You're trading the volatility, buying calls, puts. And so you're always working on an ongoing trade. It's never like, this is the only trade and this is the end. There's always like continuity to the trades, right?
Right, and sometimes we get, we'll leg into a trade. We'll start buying it, and it starts working in our direction, and we'll buy more. And people also often it's like, well, they buy something and then they average down. They think, oh, geez, I'm getting better prices. Well, that's okay, but I'd rather pay up a little bit, because I know my average price is a winning average price, because if I bought some here and then some there, okay, my average price is in the middle here and it's trading here, I probably got a winning trade. Let's let it run from there on, and then if it goes back down, I can get out with no loss, because it's trading. There's definitely some risk involved, and like I said, we don't make money on every trade. You don't want to be batting 300. You're batting 300 in the Major League Baseball, you're going to make $200 million. You're batting 300 in the stock market, you're not doing so well. We want to be batting 600, 700, 800. And so most of them are getting hits and letting the winners run, but getting out of the losers if they're not doing well, and move on. So that's what we're trying to do at all times. And one of the best things to us is I think the big thing that we really want to concentrate on, but we really try, whether it be me or everybody at Benzinga, is trading alone is a very, very difficult thing to do. And I've been doing this 40 years, and it's hard to do that. I'm constantly talking, again, I'm a pro, so I'm in this all the time, talking to people all day long, reading stuff all day long, seeing things that people don't necessarily see, and pointing it out. And I'm not the only one with ideas at all. There are people in the chat room who are giving their ideas or their opinions back and forth, and we're professional about it. And because hey, if I don't agree with somebody, I don't say, hey, you're a moron, look at this, but I do say, hey, listen, this is not, I don't agree with that, and here's why. And then sometimes we can agree to disagree, and somebody does a trade and then somebody doesn't. Just because I have a trade idea doesn't mean you have to follow it. And just because I say I don't like it doesn't mean a trade idea that you have doesn't mean that you don't have to follow it. But working together is I think giving people a lot of help, and enable them to hedge. And just to go back on the thing that you talked about, Rodrigo, is making money. I mean, we made money both sides. At the end of last week, we saw that big move in the stock market on Thursday and Friday. I mean, we came in on Friday and we had bought a bunch of calls. The market opened higher. We made 100% on those calls, sold them right about the opening, held on to some puts, added to the puts, and made 400, well, close to 500%, depending on when we bought them, and the ones we especially bought early Friday morning, 500%. I mean, so we made it on both sides, and you can do that because now we have the tools to do that. In the old days, you had to short a stock or buy a put or a put option that was, didn't what do you call it? Didn't expire for 3 or 4 months because all we had was quarterly options. Now we got options that expire every week on all the major stocks, 3 times a week for the indices. We have group ETFs, sector ETFs. We've made money trading the XLE, which is the semiconductor, I'm sorry, which is the energy stock ETF, the SMH, the semiconductor ETF, the KBE, the bank ETF, and then you can buy, and then we have inverse ETFs, and we have leveraged ETFs, and many of these have options that are very, very liquid. And again, it just enables us to make money, something that only the institutions could do until in the last couple of years. And so this has been a year where a lot of people after a very good year in 2021, a lot of individual investors have had a really tough year. We're up very nicely, up several 100%, and at least in the trading account. And it's been something that's worked out really well. And as you know, the volatility is high, and it's going to be really interesting in the next couple of days because I'm starting to see a lot of people are talking about a bear market rally. We're going to know in the next day or two if that's really going to come to fruition or not. And if it does, we got some great ideas of what can work to make that money, even though I see the stock market rolling back over and going back down, whether it be later this year or into next year. But this volatility is going to be with us for a long time. And it's a lot of fun to take advantage of it. And it's more importantly, it's been a very profitable year for us. And when any year for most people has been a very tough one. So anyway, I don't know, Rodrigo, you want to go in? We can talk about.
Yeah. So let's show. So everybody. Okay. So we talked a little bit about really more or less your background here in this market, what you're doing. Let's show the folks really how you're making these trades. Like show them the charts. Like what exactly are the moves? What was your thought process going into that trade? Obviously you have 40 years. You give them the exact strike price, expiration, the specific contract. But as far as go through the trades, okay, this is what we did last week, just so they can see actually what they could be doing if they'd be trading with you.
Right, here we go. I just want to pull this up here on my screen, and I'll blow it up so you can see it a lot better. Don't worry. Say about some charts here on the side, but I just want to go over, some of the things that we have done. And then this is not my live Bloomberg. These are just some trades, a bunch of trades that we've done this year. We've made some really nice money. Oops, why did that happen? Okay. Oh boy, those are, we've been, again, these are going, you can see here's something where we made back in May, but I want to get more, some more up to date here, some more up to date, please. Okay, sorry about that. I had them set up, and then again, it's just been a little bit of a crazy day today, and boom, there we go. Okay, so I just want to make sure we have, great. Okay, good. Okay, so again, we're talking about this thing. Here's something where earlier this month, we came in, and I've been very bearish on the stock market. I've been bearish on the stock market all year. I mean, I was saying back in December of last year, January this year, hey, you got to raise cash. You got to raise a bunch of cash because this market, the Fed's going to tighten, and this market is going to be hit very hard. Minimum of a deep correction, more likely a bear market, and eventually a recession. When a lot of other people are taking credit. Now, there are some people on Wall Street who made that call. I'm not trying to say I'm the only one, but the vast majority of the people didn't turn bearish for many, many months. They were wrong most of the way down. But even though I'd been bearish most of the year, and although I did turn bullish, and I do admit I turned bullish. I said, hey, this market's going to bounce in early June. I'm sorry, in the middle of June. And but I did stay with it a little bit too long. I thought it would turn. I'm sorry. I turned it bearish too early. But we still were able to make money through the time in late July and early August. And then when the market turned back down, we really made money. But at the same time, we want to take advantage of both directions. Here was a situation in October where we came out and we made 53% in just one day. Okay. Even though I'd been bearish on the market, and even though I said, hey, this market's going to go lower before, as we go into October, I came out, whoops, and this is the TLT. We came in, we bought the TLT calls. Those are the bond market, okay? This is not even the stock market. We bought the TLT October 7th, $105 calls. The next day, they were up 53%, okay? Let me just go one way here, whoops. I'm going to blow it up here so you can see it better. My apologies. What happened? Okay, there we go. Whoops. Okay, now at the same time, let me blow this up there. You can see it bigger. Okay, much better. Okay, here we go. At the same time, we bought, because we saw that the TLT was going to rally. That was the bond ETF. That means the price of the treasury market were going to rally. That means interest rates were going to come down. That we felt was going to be something was going to really help the market. So even though I had been bearish the stock market for quite some time, we came in and bought the QQQ. Those are the options on the NASDAQ 100 ETF. The QQQ. I'm sure you hear a lot about my favorite one is the lady that gets into the ice tub in the locker room and she takes the bath and she hops out. She's talking. That's a commercial for the QQQs. Well, sure enough, again, came in and told the exact trade we wanted to do. We wanted to buy the QQQ, October 7th, $280 call options. We bought them very late in the day on the 3rd. Again, this was not the day we traded them. This was the expiration date. We bought them on October 3rd, just like we did with the TLTs. We saw that the bond market was probably going to rally. And sure enough, the next morning, we made 128%. We more than doubled our money. We bought them right before the close on one day, sold them in the first hour of trading the next day. Now, if I had bought them a little bit earlier, we would have made more money if I had held on to them longer. But I was like, I'm still bearish on the market. I knew it was going to go lower. And I was right about that. But I did get out early. But it's like, man, if you're going to beat yourself up after you've doubled your money and literally it was in 1 hour of trading, overnight trading, but 1 hour of actual trading time, you're just going to drive yourself crazy. You want to be able to, that you can make. Let me just get some of these bigger ones. Okay. So here's something else that we did in September. But again, I want to show you that we've done something we do on a monthly basis. And again, remember how I talked about how I've been very, very bearish on the stock market. And when the things turned down back in August, we took well advantage of it. And I'll show you some trades we did in August as well. But here we did on September 12th. Okay, again, we came in on the TQQQ. This is again the TQ. This is the leveraged ETF where we really get some more things. And I knew that the QQQ was going to come down, so we came in. We bought the TQQQ September 16th, $30 puts. We bought them in the morning on the 12th, and by the next day we bought. We almost got the exact low for them. By the next day, we had sold them right near the high. We didn't get the exact high. I'm never gonna. You make 250%. Remember. If you make 100%, that's 2 times, 200%, 3 times. We made 3.5 times our money in just a day of trading. So again, I'm sure it's not going to worry about that. And of course, it did roll over. And actually, you don't see it. The rest of the day, it sold off quite a bit. And we locked in that very nice profit. But we do it in many different areas. Here was a situation where we bought it in the UUP, the dollar. This is the dollar ETF. And we just thought the dollar was getting too overbought and too overloved. So we came in on the 7th and we went out several weeks. Okay, went out a little bit longer, but the UUP, September 23rd, $29. Again, specific trade. The UUP, the strike price, September 23rd. The strike price was $29. The expiration date was September 23rd. And of course, whether it's a put or a call. Well, we held these for several days. Now, this was a 4-day trade. But again, we doubled our money in 4 days. And here's some other ones where you get, again, so I mentioned those October, oops, did I go the wrong way? We did talk about those earlier in the year. Earlier in September. Again, same thing, TQQQ puts. The calls when the market got oversold. The point is we can make money in both directions, 166%, where we made them on one day. The next morning they opened up 166%. I'm like, I don't know what's happening tomorrow or for the rest of the day, but we just more than double our money. We've made 1.5 times our money. We're moving on to the next one. Okay. Oops. These are the ones I'm keep going the wrong direction here. Okay, let's just get. And here's another one where this is back in August. We talked about how the market had become, we turned, but before them, we turned really bullish on the market in in August, the middle of August. I came in LABU. What the heck is LABU? I never heard of it. What it is the levered ETF on the biotech sector. And the biotech sector, I was looking at the IBB biotech ETF, it become incredibly oversold. And so late in the day on October 3rd, when we were buying the August 5th calls, that's the expiration date, August 3rd, we came in and we bought the LABU August 5th, $10 calls. By midday the next day, they were up 850%. Needless to say, I didn't hold on to them after that. We didn't get the top. If I'd sold on longer, we might have made more. Well, we would have made even more money. But boy, if you get mad at yourself for not getting that extra, 50% when you've already made 850%, 9 times your money, you need to be doing something else. So it's just, and again, I just went back giving you examples from each month. Back in July, when the market, and again, I stayed. Remember, I said I did stay. I turned from bullish back to bearish a little too early, but I still saw some short-term potentials. This was an intraday trade where we bought the TQQQ calls, okay, and we bought them in the morning. Again, we don't do this too often where we make it all in one day, but again, 133%. We bought them at 11 o'clock in the morning. We sold them at 3 o'clock in the afternoon, and more than doubled our money. So these are the types of things that we're constantly doing. Again, this is another one with the TLT calls. Here's another trade we did in the wheat. Remember how much wheat, remember all these commodity prices had taken off during the year, in the first half of the year. And then they came crashing down in the beginning of the summer. Well, I came in and said, no, I'm not trading wheat. I'm not going to, let's go to Pork Bellies, it's at Trading Places, which is a very funny movie, but we don't have an account on the Chicago Board of Trade. We don't need that. We went to the wheat. Let's say this is WEAT, doesn't have the H in it, but this is the ETF for wheat. And sure enough, we came in and we bought the July 15th, $9 calls. 3 days later, we sold them with a 250% gain, just 3 days later. These are the types of trades. Can I just do that again?
Right. And for those that are not familiar, Matt Maley has the record here at Benzinga for pretty much the highest percentage trade. I believe it was some Chinese ETF, like probably 8,000%. And again, these are trades that have entries and exits. These are not random trades picked up from. These are trades that we are taking. Matt is taking them, and the members as well. But obviously, not every trade's like that. But I believe this is the top winner. And before that, you had the record as well with, I think it was Viacom shorting it.
Viacom, actually, yeah, because when Viacom, remember back in 2021, when all the meme stocks in March of 2021, the meme stocks were going crazy. We came into Viacom and just said, okay, this is before I say that, because you can see last weekend's chart, that was last weekend's chart back in March. So this is an old chart, but that just tell you what to do. But here, forget, let's not, whoops, what happened? Sorry. There we go. So disregard that. But the point is, we did in Viacom, it rallied a ridiculous amount. Its relative strength in this RSI became the most overbought it had ever been, ever, by a long shot. And so we came in and bought put options in Viacom. Now, Viacom has since been split apart in Paramount, CBS, et cetera. But the stock, the next day, the stock fell 60%, and we sold half of our position the next day with a 25%, with a 2,500% gain. Then we sold the other half of it later with a 5,000% gain. This is a very similar situation we had here, was even bigger trade, FXI, which is the China large cap ETF. And again, back in the old days, not that long ago, 10 years ago, you'd have to have a broker in Hong Kong to do the trade for you. No. We just go to the ETFs. Again, we don't need to be a great big hedge fund to do these trades now. So we wanted, again, I had stayed negative on China all year long. They kept, the Chinese government kept slamming one industry after another. Each month it was a different industry. It started with Jack Ma, and actually in late 2020, and then they just kept hammering. Then it was the gaming industry, and then it was the rest of the tech industry, then it was retail, then it was education stock. Each time these groups down. Then finally, as we moved into this year, the U.S. came in and said, we're thinking about delisting your stocks, and the market just fell out of bed. Okay, and look at this. This is what's called the relative strength index. And when you get, this is a way to see if a stock is overbought or oversold. You see how when it got oversold here, you see that it gives you the green line there. That means buy. It's get down to 30, buy. Okay, when it gets up to the red, that's 70, that's sell. Start selling. Look what happened. Every time it got oversold, it bounced nicely, right? Same thing happened here. Got oversold, got down to that green line, bounced nicely. Here, it bounced nicely. It took a couple of days, but it bounced nicely. Here, look how ridiculously oversold it became. So I was like, okay, this is the most oversold reading ever on the relative strength index. We got to step to the plate. Now, it wasn't just the technical aspect of it. It was also my experience. I'm like, I know China. First of all, This makes them, they lose face in a major way. They look really bad because their stock market had been going down anyway. Well, because the US just did something, it fell out of bed. So I knew the Chinese government would come in to support the market and do whatever it took. Not only would the market oversold and it would bounce on its own, but the Chinese government would come in and buy the market hand over fist. Sure enough, the next day, huge rallied 27%. That'd be like the S&P 500 rallying 27% in one day. Okay, what happened with us? Well, sure enough, on the day that was what it was, falling out of bed here on the 15th. Whoops, I got a thing that you can't see, but it's in my way. I can't see it. There we go. On the 15th, late in the day, and we bought the FXI March 18th, $30 calls. Okay, the next day they opened up 1,000%. They said, well, wait a minute, Matt, you said if it opens up a lot, you just go ahead and sell it. This was a special case because I knew that this was not a meme stock that could completely reverse in 2 seconds. All right, I knew the Chinese government would be in here pushing it. Sure enough, they did, and it kept going. But by 11 o'clock, it was up 3,000%, 3,000%. And I said, oh, wait a minute, we got to take some of the chips off the table here. This is beyond belief. So we sold half of the position. Came right into the chat room. Said we're going to sell half our position. Then we held on to it. At the end of the day, we sold the other half up 8,000%. Okay, almost 7,800 to be exact. Some people, and I even said in the chat room, if you want to hold on to it, you go ahead. But I just it up 8,000%. I said I can't get greedy. Some people held on, made more than 10,000. One person said they made more than 14,000% on this play. Now, again, this is not something we do every day, these unbelievable trades. But again, here's another one in April, 2,000%, 600% gain. SQQQ, that's the very similar. It's instead of being the leveraged ETF on the QQQ to the bullish side, it's the one that is one to the bearish side. Here's one on the VIX options. We bought the May 18th, $35 calls, 82%. Now this was over a couple of weeks, and you tend to make that money in the VIX things over time. I just want to see some of these individual stocks that we've done, but just look at this. Okay, here's 78%, 71%. When we make these nice moves, okay.
Right.
Okay, I just want to bring up one more on just Apple Computer here, where we made 400% back in May because I knew that was becoming a source of cash for people during the crash in Bitcoin and in the cryptocurrencies. So they couldn't sell enough of the cryptocurrency, so they sold Apple to meet their margin calls. Once that selling was done, I saw the selling was done in the cryptocurrency markets. We came in, bought the Apple calls, May 13 calls, bought them late in the day one day. The next morning, by mid-morning, we had up 400%, made 5 times our money. So it's not just the index calls. It's not just we make them in individual stocks, index ETFs, group ETFs like the XLE, et cetera. And that's how we do it.
Right. No, that's definitely interesting. And we're getting a lot of questions here from the viewers here. Really quick here, Matt, can you just briefly go over the Tuesday session? Really, what does it cover? Is it trades? Do you cover some education like market education, Fed discussions, market discussions? What's covered?
Yeah, so in the chat room we have well, outside the chat room, but it's part of the group that we have there, is that we do a Zoom call every Tuesday at 11:30 Eastern time, and we talk about all sorts of different things. I thought this was going to be something that would be a 15-20-minute call. Now it's been more like 45 minutes to an hour. And again, we do educational things. At one time, people were talking about head and shoulders patterns, and they were drawing them on, and I said, there seems to be a discrepancy of what a head and shoulders pattern really describes. And so we spent 15 minutes one time just doing that, just talking about what a real head and shoulders pattern looks like and what its implications are. And other times we'll be just talking about we frequently talk about what the plunge protection team when the markets come in, when the markets get really out of whack, and what the government might do to keep to shore things up and calm things down. But then we talk about the individual picks that we're looking at that day, or have been looking at for a while, or ones we've been looking at positive potential ones. Say, this is something we're really looking at, and let's take a look at it. I'll give you an example of this, and we talked about it today. Advanced micro devices. What if this market is going to turn around? Here we go. Advanced micro. Is the market, are we going to see this bull market rally? I'm sorry, bear market rally. I definitely think it's only a bear market rally, and we can talk about that further. But look how this thing has been going. Advanced Micro Devices. I'm sure you've all heard of the semiconductor stocks. All these chips, demand is way down for PCs. They're down for cars. General Motors, Ford Motor Company, both saying that their demand is down. So, I mean, you know how many semiconductors are in? I mean, there's a gazillion of them in every single car. So look at this right here. This Advanced Micro. This is what we're talking about right now. And in our Zoom chat, if this thing can break above $60 and the market goes, this stock's going to take off. I don't care how bad the news is. When everybody's on the bearish side of the boat in the chip stocks, this is going to be a great opportunity for us. And we're looking at, if it breaks above 60, we're going to be looking to buy calls later this week in the chat room for a run to $70 if we get that break.
Right. So and we're getting a lot of questions. And yeah, look, that Tuesday session is great. If I ever have a little bit of time there, I'll definitely pop in there. The folks keep me busy, but look, we have some questions here from the viewers, Matt. Let me just go over this really quick. We'll get back here into the session. I know a lot of people just came in here right now recently. So just to give you a quick overview before, we're pretty much talking trade ideas, setups, market discussions here with Matt. Live, you're catching us literally just 40 minutes in. So you're good. All right, to the questions. Are the sessions on Tuesdays recorded? Yes, Phil, they are recorded and they are and pretty much you can just request them. Every member, Inner Circle member will have access to that. Does everybody that joined get a free laptop? Yes, we are doing that. We are giving the laptops away. Anybody that joins, right? Chat room schedule, that's 8:30 a.m. Eastern till 5 p.m. Eastern. That's when Matt is there, but the chat room is open 24/7. It doesn't close, right? Let's see, is there a money back guarantee? Yes, we do have a 30-day money back guarantee. It won't change on you. And the price at renewal is going to be the same as today. We do have the renewal would be next year if you do the annual. If you do the lifetime, you just reach out. I'll take care of that for you. But basically, yes, for annuals, it renews at the same price. Joe, let's see. Next question. Push notification. Yes, everybody will have push notifications. All you have to do is download the Benzinga app, enable the push notifications, log in with your account, and you will be receiving those trade alerts from Matt from the chat room on his entries, exits, all that sort of stuff. And then next question, how much capital is required to trade in the chat room? Matt, some of these calls, puts you're buying, they're like 80, 90 cents, like $1.
And I try to keep them that way. These big expensive ones are they're just, you have to be so exact with the timing, and it's just much harder to do. But I try to concentrate on the ones that are trade around $1 or less. Sometimes we do trade more than, but yes, we definitely try to keep it on the cheap because I want people to learn and grow into the whole thing. I mean, you don't need $10,000 or $100,000 to start this thing. I mean, you can do it for I mean, you can do trades for $50. I mean, and then you start to do paper trades when you're really starting out. So it's definitely something that you don't need a lot of money to get going. But the whole point, of course, is that we help you make enough money to pay for your subscription quickly, very quickly. That's a whole lot.
And the only thing I wish is that all these people here would have been in the chat room these past couple of weeks. Fred has a good question. Approximately how many trades are provided on average per day or per week? Matt, depends on the volatility, right? But you're typically always either adding or taking off the table, depending on the volatility. Volatility does not have a schedule. That's the thing.
Right. But we definitely do it. So, I mean, I can't think of a day we didn't. I mean, if there's really, I mean, let's face it, in a month and a half, when we have the day after Thanksgiving, and it's a half a day, the market's open half a day and nothing's going on, I'm not going to do a trade just to do a trade. That doesn't make any sense. Nobody should do that. But and sometimes you can't force things to happen. That's what happens sometimes. If people get so excited, they go, I really want it to go up, so I'm going to go ahead and buy. No. The market's doing nothing. Let's just sit on our hands for a while. And so, yeah, we do that at times. And we did that last week several times. It's funny going into those big trades where we made so much money at the end of the week on both sides. But a couple of days where we weren't doing much because it was just, we were waiting to hear, what's going to happen with the CPI number, what's going to happen with the bank earnings, things like that. So sometimes the right thing to do is sit on your hands. But yes, definitely, you don't need a lot of money. And the other thing too, I don't spend more than 10%, or almost very rarely do I spend more than 10% of my trading account on any one trade. And people blow themselves up because they bet the farm on one trade right away, and then all of a sudden they're like, ease into it. There's it's all about learning. And believe me, I've been doing this 40 years and I still learn something new every day. So it's not something you have to be aggressive on when you start at all.
Right. Absolutely. It's not a big barrier of entry. And also keep in mind, like the learning side of it is really the real value there, because nowadays you turn on the news and, it's just somebody reading off a teleprompter, being told what to say by their sponsors or who knows what. In this case, I'll tell you really what stands out the most to me is that you get it as it is, right? With Matt, it's pretty much exactly what's happening in the markets and how investors react, how traders react, right? Based on your experience. So I think there's an added value here that's really hard to quantify nowadays when you're trying to trade stocks in the markets from a retail trader's perspective.
Right. I mean, that's the whole, I mean, we're just trying to help people, even up the playing field, I guess is the point. And, you get some of these chat rooms where there's 20,000 people in it, and you think it's just a bunch of, guys and gals like us. And then you find out, well, actually it was this multi-gazillion-dollar hedge fund that, was pumping and dumping. They're trying to spread stories and stuff so they can pump up a stock so they can sell it. Sometimes they do it when they have a loss and they go, well, let's try to limit our loss. So let's pump it up here so we can sell it. And then instead of being down 20%, we're only down 5% and move on to the next one. That's what I hear happens. We don't do that. You know what I'm doing, when we're trading it. And it's a nice small group. And like I said, you do not want to be trading alone. When you have a group of people that they're helping each other out, it's a great advantage. So this is what we're trying to do.
Right.
And really looking for some opportunities that could be, the next couple of weeks are going to be very important. We're going into the election, the volatility, year-end stuff. There's going to be a lot of rocking and rolling going on, and we want to be able to take advantage of it.
Right. No, absolutely. And Matt, really importantly, right? The fact that this is not your first market crash, it's not your first recession. It's really a very unique time in history, and we're going to get into all of it, guys. We're going to get into, Fed market. I know Matt is just on the edge of his seat just to start ripping it away. But yeah, folks, this is basically just, you can ask Matt questions about like stocks. I know that there's a lot of long-term investors, individual people that are there in Matt's room, and they're just there also for his commentary to really know what's happening in the markets and also to hedge their current positions. So Matt, what kind of traders do you have in the chat room, just so that we pretty much cover everybody that would fit in?
Yeah, I mean, we have a wide range of people. We have some people who are day traders, and some that literally go out flat every night. I think most people do have something on. Even the people who do more active trading, day trading, still have something on overnight. And right now, the way the market's, what's going on in the economy and the marketplace, I think it's a blow up could take up in any place at any time. You should always have some sort of a little protection in the market. But we also have people who are swing traders. They're looking to do things over a couple of days or a couple of weeks. And then you have people who do all of that. And it's the active traders a little bit more over a couple of months or a couple of weeks, but all of them, of course, still have long-term holdings. I mean, if it's like anything else, look at Google. One of the things I keep talking about right now, you should be buying Google because it's one of the few cheap stocks that are out there in the marketplace right now. But buying it very gradually because we don't know where the actual ultimate bottom is going to be. Then we'll pick a place when we really see the thing is turned. Then we can get more aggressive. So it's if you're a long-term trader or a long-term investor, it's a good place to be. But for those active traders, I think in any of you are active traders, you should still have certain positions that you have for a long-term basis. And people are asking about those things all the time. What do you think here? Do you think, some of these, and in the energy sector right now, when I was probably the first guy on Wall Street to turn bullish on it in October 2020. And last year, when I was bearish on the stock market, telling people to raise cash, getting people into bearish bets to make some money, I was also bullish on the energy stocks. And while the rest of the market was going down, energy stocks were going up, and we were involved. And so we have, again, a whole array of different players. But again, many of those
Right.
who have different buckets. They have that long-term bucket, but they also have an intermediate term bucket and a short-term bucket. Some of them just have a long-term and a short-term, nothing in the intermediate side. But again, we're talking about all these things all the time, and people are asking me questions about that all the time. And because the thing is, everybody's talked about, hey, it was an everything market, it was an everything bubble beginning of the year, and everything went down. Well, that's actually not the case, because the dollar went up, and oil stocks went up, and oil stocks went up. So we want to be able to take advantage of this, and we have the tools now. Those tools weren't available to us before. And again, I don't try to pretend that every trade I've had has been right. There's definitely had some losers, there's no question. But we're way up this year, and it's it's a situation. Here's one that we just, again, I was talking about advanced micro devices, not to get off on it too much, but see this thing here where I talked about how it's making a nice base here. It's going down, down, down. Even here, we're trying to base. No, we're still going lower, still going lower. This has been a sideways range, and it's been bumping up against that $60 level 4 out of the last 5 days. It can finally break above that, and if it can get above this trend line going back, to August, this stock is really going to take off. And we also have another thing. We talk about, again, the educational aspect. This is what's called a MACD chart. And what this does is it gives you, it doesn't give you key turning points. What it gives you, though, is that once a key turning point has been made, it tells you that the momentum has changed. And look at how it happened in this stock here in advanced micro devices. When we got that positive MACD cross, what it is when the 12-day moving average, exponential moving average, crosses above the 26-day. And that's a bullish indicator. Now, I say, oh, geez, that sounds complicated. But I'm sure a lot of you have heard about these things about a golden cross, when the 50-day moving average crosses above the 200-day moving average, or a death cross is when just the opposite, when a 50-day crosses below the 200-day. This is a shorter term play. But it tells you that, see how this is seeing a very minor cross. We got to avoid the head fake, because we got a head fake here. It was just a minor cross. And see, it only lasted a couple of days. But if we can get a more meaningful cross like we got here, back in the summer, and look what the stock did, just took off. So if this happens, we're going to get more confident. Not only that, we're going to buy someone that gets above 60. We're going to buy someone that gets above the trend line here at about 61. And if we get a positive MACD cross, or a confirmed, not just a slight one, but a confirmed one, we're going to buy even more. And this stock's going to be trading at $70. We're going to own call options at a much lower level. So these are the types of things that we're looking at all the time.
No, absolutely. And a couple of people are asking where to sign up. Newton, we're putting the link on the chat, so make sure to use that link. As far as getting the push notifications, that's separate, that's after, but all the members will get it. Matt, so let's dig into it, man. What's going on with the Fed? What's going on there?
Yeah, I mean, we a lot of people are talking about this another bear market rally, which could indeed take place, and we'll know that really in the next few days, maybe by tomorrow, maybe even by tomorrow. But what's going on now is that, you keep hearing these people talk, what has the Fed done? And, with the Fed raising interest rates, and again, a lot of these perma bulls, they keep saying, well, the Fed, they were saying in the fall, though, the Fed is going to have to, something's going to break. They're going to keep tightening until something breaks. So eventually they're going to have to pivot. Well, that's great. But you know something? Between now, the time they keep raising interest rates and the thing finally breaks, the market's going a lot lower. The biggest problem is that so many people, the Fed injected this ridiculous amount of liquidity into the system, which they had to do. I mean, people forget how bad the situation was in 2020 during the pandemic. The total global economy had shut down. Okay, so all the stock market would have, the whole system was shutting down. But the bond market wasn't working anymore. They had to flood the system, and that's what they did. And we all know that they pushed the stock market way above the underlying fundamentals, but we figured that the underlying fundamentals would catch up eventually, which they started to do. The problem is they kept the liquidity going and it never played catch up. So as soon as they started removing that liquidity, but by raising interest rates and by reducing their balance sheet, the stock market had nowhere to go but down. Didn't matter if we were headed for a recession or not. Didn't matter if we had inflation or not. Okay. The stock market was trading at 22 times earnings. It's only traded that time and above 20 times earnings in any kind of meaningful way twice. It was in the late 1990s when liquidity was being fed into the system because of the Y2K issue. And, and then of course, when the year 2000 came to an end and that the Y2K issue was gone, they pulled the plug on the liquidity and the market got clobbered. The same thing happened now. The stock market was always going to get hit and get hit pretty hard, whether we had any inflation or not, because they couldn't keep that liquidity in the system, because we just would have built up a bubble that once it burst would have been would have led to a complete meltdown in the marketplace. Okay, they couldn't keep doing that. They knew they had to raise interest rates, because interest rates were zero. They were at abnormal level. Okay, they had to let them go back up, even if we didn't have inflation. Okay, so that meant and they had to let the balance sheet shrink because it was at a normal level. There was way too much liquidity in the system. If they kept on let that going, that would have led us to another 2000 style bubble, the 1999 2000 style bubble. If that burst this time around, we wouldn't have recovered. That back then the economy was fine. This time we are a highly leveraged economy, $11 trillion of corporate debt in the system. We cannot have that kind of a bubble again. Okay, so they had to back away. But then what happened? They stayed too long. That meant inflation was going to raise its ugly head. But then what happened after that? One thing they couldn't have seen coming was the Russia invasion of Ukraine. And that meant that oil prices are going to go through the roof and food prices are going to go through the roof. These are supply issues. The Fed is doing what they can, okay, but they can only do so much. For people right now, people all said, well, geez, we've already priced in a recession. That's wrong. The stock market all the stock market has done is gotten rid of that froth that was built up in 2021 with the massive levels of liquidity. The market was trading at 22 times earnings. Okay, that the only way, forget about low interest rates. First of all, interest rates are going up, even no matter what level of interest rates, okay, in history. If you don't have massive levels of liquidity into the system, stock markets don't get to 22 times earnings. They just don't. They never have. They've only done it twice. Again, Y2K. For those who don't know what Y2K was, that was when the banking system was going to go there because all of their accounts said the year was 91, then it was 1992, 1993, 94, 95, 96. When it got to 99, when it got to 2000, it was going to double zero. The computer was going to think it was 1900. Okay, so everybody's money would have disappeared. People knew this well enough in advance, so the Fed and all the other central banks behind the scenes flooded the system with liquidity for years. That's what really caused the tech bubble, okay? Now, don't listen to what anybody else tells you. That's what really happened, okay? And sure enough, when in February of 2000, when they said, oh, okay, we wanted to make sure everything's working 2000, everybody's kept their money, okay? Now we can pull the plug. They pulled the plug on the liquidity. What happened? The market fell out of bed. Same thing happened this time around. They had to put money into the system because the economy had completely shut down because of the pandemic. Okay, so then once they had to pull, they couldn't let it keep going. They had to pull that money, whether inflation or not, and that was always going to cause a pullback and a slowdown in the economy, a steep correction in the stock market and a slowdown in the economy. But then when the Ukraine issue came along, that made it much worse. And and again, people are saying they've priced it in. Well, we're still trading at 16, 17 times earnings right now. Okay. That is not where a bear market, every bear market since World War II has bottomed below 15 times earnings. Okay, every single one. Okay, to get to that now, and then also, again, we are headed for a recession. I'm convinced of that. I know people saying we're going to have a soft landing. We haven't even really felt the real impact of these interest rate hikes, or have we felt the impact of rising inflation? And inflation is not going to come down. Demand destruction can only do so much. Okay, just like the 1970s, we have stagflation. What happened in the 1970s is OPEC came in and they shut down the oil market and they just stopped. It was a supply issue. It's the same thing now because of the war in Ukraine. There's not as much supply as we need in the system. And then, of course, on the other side of that, we're not producing enough anyway. So when you are not producing enough because we underinvested in the oil industry for many years, and it's not just a Biden thing, the same thing under Trump, both administrations from both sides, underinvestment, and so oil prices, so there's not enough supply. Now with the whole Russia situation and that war isn't anytime soon, that supply is going to remain a problem. So are food prices, because Ukraine and Russia are the breadbasket of Europe. Okay, these food prices are going to remain high. Inflation is going to come down, but it's not going to come down as quickly as people thought because they don't pay attention. They just get they spend too much time reading textbooks than looking at what really happens in the real world, like I did as a trader. Okay, and that's what if they looked at the real examples in the 1970s. And so inflation is going to remain high, even though it comes down. That's going to push us into a recession. That means earnings are going to be lower. That means to get to fairly value, to get 15 times earnings, the stock market eventually is going to have to go to 3,000. But we're going to see some bear market rallies along the way. We're going to take advantage of those too. So that's the big situation, the big picture situation. And I know the perma bulls on Wall Street who are paid to be bullish. Face it, most people on Wall Street are paid to be bullish. They're missing this right now.
Right, and this is what I mean about like real practical education, like as far as like what's happening in the markets. Really, like trading, a lot of people think trading is just buying and selling. There's so much about what's happening in the markets, what dictates the moves, and just being able to digest that for traders. It really does help because most people, Matt, they're just trading whatever's trending on StockTwits or Wall Street Bets.
And that worked last year in 2021. But when the Fed is pumping like crazy volatility, liquidity into the system, that's what happens. Everything goes up. Well, that's fine, but we're not in that anymore. And so not only are they not pumping it in, they're taking it out. It's one thing to just stop pumping it. Okay, that was tough, but now they're starting to shrink their balance sheet. That's going to be harder. Not only are they pushing interest rates to zero and just leave them there, now they're pushing them back up. There are implications to that. People all thought that Cathie Wood, she's a very smart person, but she thought that she was so smart, all these innovations. She did not realize that it was the Fed's liquidity that pushed her stocks so much to the upside. It doesn't mean that the companies that she's buying aren't good, but she didn't realize and still doesn't seem to realize that how much liquidity played in that. Those companies will still do well, but they have to come back down. Most of these stocks are still very expensive, and excuse me. And so, not all of them, but they're still very expensive. And so, until we are going back to equilibrium, everybody thinks the Fed is fighting inflation. That is, yes, that's a big part of what they're doing. And something they said before this time last year and in the summer of last year, 2021, they're saying there's too much froth in the business, and we know that all these companies, people, I've got an idea, great idea, great. Here's $10 million. See if you can go work with it. Silicon Valley was doing great. There's not as much money for them to do that. You think private equity firms are going to still continue to do well, but there's nowhere near as much money in that area. If you're good at private equity, you're going to do real well. If you're not very good at it, you're going to be out of a job soon because there's no way they're going to give you as much money as they had for many, many years. That's what
that's what I do like about private equity. It does have its own different things. All right, so Matt, let's just say here, based on your last experience when you were trading, was it like in the 87? I don't know what year was the crash. What similarities do you see in today's markets from there, and what other similarities you don't see in this one?
Well, again, the 1987 crash was interesting you mentioned it because the 35th anniversary is tomorrow. So let's hope that we don't get another crash. It doesn't look like it, but we could get a crash along lines. But what we really need to look at is that this is going back, this is different than 2007 to 2009. Because the banks are in much better shape. That doesn't mean the banks won't have losses. And we see what's happening with Credit Suisse; they're in trouble. But what we do have is very, very similar to what we saw at the end of 1990. I'm sorry, at the tech bubble, and because it was built up the same way. It was built up by this excess liquidity that just got pushed to the market, and we said we have to have it there. The reason that the authorities were like, we need enough money so that so we can pay people to fix it. Literally, that's what they did. Number two, we need to make people feel comfortable that they're banking because, as you know, it's a fractional banking system. I mean, all the depositors put their money in the bank, but a lot of that money isn't there. So if everybody comes forward all at once, as you see in the movie, It's a Wonderful Life, when Jimmy Stewart says it's in his house, it's in Susie's house, it's in John's house, it's in these people's homes. It's like we don't have it all here at once. And so the Fed was worried that everybody would come worried that the double zero thing in the year 2000 would cause their money to disappear, and they were worried that it was going to that people would go and come and try to get their money all at once, and so they flooded the system with liquidity, kept the markets buoyed, and it worked. It worked beautifully. The problem is when they pulled the plug, the market got hit hard. The same thing is happening now. They did the right thing. The Fed did the right thing by holding up the system during the pandemic because the economy and the financial system had shut down. I'm telling you right now, in March of 2020, we were staring into the abyss just as much as we were in 2008, because when the fixed income markets were beginning to freeze up. I mean, from what I understand, one big firm wouldn't do a treasury trade. That's the most liquid, safest thing. An overnight trade. They said, we don't know what's going to happen tomorrow. We're not going to make a market in it. That's when the Fed had to come in. So they did the right thing. They kept the market going. The problem was, and they did make a mistake. I'm not trying to give the Fed a free ride here. They kept the liquidity going much too long, and that did create inflation. However, that's not the only reason why we have inflation. The other half is a bigger reason is because of what happened in Ukraine, and therefore, they are going to have to keep that. They're not going to be able to pivot as quickly, and a pivot is not a pause. I'm sorry, take it back. The other thing, just opposite. A pause is not a pivot. Just because you slow down, that doesn't take interest. Just because you slow down your rate of hikes, just because you even if you completely stop your rate of hikes. Right. That is not the same as cutting interest rates. That is not the same as adding liquidity to the system. That's the only way you're going to get the stock market back up to 19, 20 or times earnings or more. I mean, it's going to come back down. We have to face that reality. Now, it doesn't mean that the market, we saw what happened this summer, the market perceived that the Fed was going to pause and that put the market move higher, and then we'll do so. We get these bear market rallies, and we could see another, we're starting to see another one right now. We'll see if it continues. But either way, we're fighting this thing. Too many people are just assuming that we're going to go back to what we were in 2021. That only happens when you have massive liquidity. You're not going back to what we had if the Fed does is stop raising interest rates. If they leave them high and they keep liquidity draining, it's going to make it. It's going to be good. We're going to go back to what we should be doing based on the fundamentals. But that process is going to take time to work out.
Yeah, and also kind of like cautiousness for traders, because it's very typical for people to be saying this is it, like this is the bottom, and they throw out these facts about here and there, but ultimately we really don't know. And you know what I mean, like on the TV, it's like, well, we had the best day in 2 weeks, so like I guess, but we've been doing so bad for the past 2 weeks, so I guess it's just important to kind of see through the curtain.
What they say, I mean, it is accurate. I mean, when you say, well, look at these, we've had this, the certain things where, a certain number of stocks below the 200-day moving average and all that stuff. That's good stuff. Believe me, I follow all that stuff. That's important. But those can give you short-term bottoms. As for the bottom, they two things that we haven't gotten. Two of the most important things. Number one, every single bear market since World War II, and probably since before World War II, I just haven't studied it back further than World War II. Everyone has seen the market get not just back to fairly valued, but to undervalued, because all this leverage built up during those all that liquidity was flooded into the system. Everybody was making so much money, so they added huge amounts of leverage. The leverage in the margin accounts, when you deleverage, you get margin calls and such. The margin account, the margin debt in the system, it is back to where it was at the top in 2007. Forget about where it was at the bottom. So still more deleveraging that has to take place. But every single market has gone to a cheap level, okay? Mm-hmm. In the last 70 years, we're nowhere near to that. We're not there yet, okay? I don't want to say nowhere near that. We're certainly have moved in that direction, but we're not there yet. The other thing that every single one since in the last 12 years, since the great financial crisis, is that a major policy change has taken place, okay? In 2009, the Fed was flooding the system with liquidity. That didn't help. What they had to do, they needed to be a policy change. This happened in D.C., Washington, D.C., where they changed the mark-to-market rules for the banks. They didn't have to mark-to-market their assets every single night. So they suddenly finally had to weren't forced to sell every single morning when they came in on this mark-to-market rule. That was a change in policy. In 2018, we had a deep correction, which really bear market was down almost 20%. And the Fed, what did it do? They pivoted. They did a major pivot, not in pause. They went from raising interest rates to cutting them, okay? That was a major policy change. In 2020, during the pandemic, major policy change where the Fed came in and flooded the system with liquidity. Right now, there's no policy change on the horizon. And like I said, a pause, if they just stop, that's not a change, policy change.
Right.
That's just a pause. So
So
we haven't had these things, and until we do, we're not going to see the bottom for this bear market.
So as long as they think the economy is doing well, we're going to keep doing the hikes. You have some people saying that this economy is strong as hell. You have some people that, disagree. Where is the economy? Where are I mean, do you really put so much weight on the employment numbers considering how hard it is overall? Like,
Again, the economy, the economy, they keep saying the economy is doing really, really well because that's the only way they can justify the inflation. But inflation is really there because of supply issues. And the economy is definitely deteriorating. And you see consumer demand is dropping like a stone. We had, Bank of America, it was funny because Brian Moynihan, who I have huge respect for, he's a great CEO. But, in his interview, he talked about how we see the consumer doing well. But then his interview yesterday, he said, well, they're doing well. They're definitely not doing as well. and we do know that credit card debt is now at an all-time high. The only way they're keeping up with things is because they are going into debt to keep their spending up. And so at some point, they're going to have to stop, and they're going to say, I can't get any more credit card debt, so and I have to pay so much more in food and energy than I used to. I've got to cut back on other things, and that's what's going to cause the economy to slow. And that's when again, it's stagflation. It's different than anything we've seen since the 1970s. But the people who keep saying that the economy is it's funny because they keep saying they want to say the economy is fine, and then they say, but the Fed's killing it. It's going to push into recession. So, well, which is it? I mean, you can't have it both ways. The big thing is that the Fed themselves has said, we have to cause some pain. We're going to have to go through some pain. I mean, when the Fed chairman comes out and says, the chances that we get a soft landing are very remote now. That's basically what he said. That's as much as you'll ever get from a Fed chairman saying we're going to have recession. Okay, we're headed for a recession. It doesn't mean we're gonna have the end of the world. It doesn't mean it's going to be like 2008 or 2000, and maybe just a run-of-the-mill recession. That's okay. And we hear on TV, it's like, don't worry, we're not going to have an implosion in earnings. We're not going to have this complete debacle in earnings. We don't need a debacle in earnings. If you get the average recession, earnings go down 25%. Even if they only go down 10%, the stock market has to drop to the low 3000s just to reach fair value, much less undervalued. So I'm not calling for the end of the world here. And you don't have to call for the end of the world. And that's why people are trying to say, hey, what's happening now is what usually happens. But that's not the case, because the stock market has got so much more overvalued than it normally would because of the pandemic. It has to come down more. And so the process is going to be a longer one and a more painful one. It doesn't mean it has to be as painful as it was 12 years ago, but it's still going to be a tough one. And we got more to work through, but we've been doing it all year. We've been profiting from that all year. We think we can continue to do that. And like I said, we have the tools to do it. And that's what makes this situation so unique compared to 25 years ago or 2000, when you just only the big shot hedge funds and mutual funds had those tools at their disposal. We all have it.
Right. I think more importantly, it's not just having the tools, but somebody that's been through the whole process. I mean, being in Wall Street from the early 80s, I mean, I don't know if there were even computers at that time.
Well, there were. Those things called Crotron. It's funny. Yeah, it was. But when somebody wanted news, if they said, what's the news on Apple computer? You had to go over to this old-fashioned tape. They say news tape. You had to flick the switch so you could pull off. It was on a scroll, this big scroll of paper, and you run it off, and you'd say, "Oh yeah, IBM news on IBM," and you'd read it, and you'd read it to your customer on the phone. Now they just look, boom, boom, boom. You're like, oh, IBM, boom, 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 current news, boom, I got it. I can come here. We see what happened today with Apple Computer, right? They had their
yes.
All you had to do is hit AAPL, equity, boom, current news, and there it is. Boom. Now I want to know everything I want to know about Apple Computer. He didn't have that when I started, that's for sure.
Right. So let's say, I don't know if you saw Goldman Sachs earnings today. Does that tell you anything specific about upcoming earnings, about the market? I mean, those guys are mostly like equity traders, right? Like that bank.
Their earnings were good. The one thing that was kind of interesting, because you see this stock here, I'm gonna pull up the how the stock traded today. Oops. See how the stock, see how it opened so strong, but it still closed up 2%, but it well off of its highs. The one thing that I get a little worried about with Goldman Sachs, and it's an unbelievable company, don't get me wrong, but their forward guidance, I mean, they did report better earnings, but the CEO today said, I saw his interview, and he said, things we're headed for a rough patch. And it's much like what Jamie Dimon said. And it's also what Brian Moynihan said at Bank of America. He just, when they kind of pinned him down, he said, is this, they said, Jamie Dimon sees a hurricane coming. What do you think? And he said, well, if we are, we're ready. We're ready for it. We're prepared for it. It's basically what he admitted was that, yeah, we're kind of looking for the same thing, but we're prepared for it, which is great for Bank of America, but not so great for the overall economy and the markets. And but the thing was that even though they reported better earnings, like I said, the CEO of Goldman Sachs said today that he's looking for some rough times, right? What else would happen earlier this week? They completely reshuffled their management. They're combining their investment banking with their sales and trading, and they're moving their they made all these changes at top in their management team. I'm like, this is not something you do when things are going great. This is something you do when you're getting ready for things to get tougher. And when you get a guy, the CEO's Goldman Sachs, and then of course probably the most important businessman in the world, Jamie Dimon, saying that there's a very good chance we have a recession. I'm gonna set up a note. So one last thing before you can see, I love the markets, and I'm very I just love talking about them. But just remember what happened in 2016. 2016. The stock market was in a correction. It was down 15%, which scared people because they remembered it was just a few years before that we had the big crash, or the big bear market, and so people were saying, "Oh, the bank's in trouble. Is there something going on?" Well, Jamie Dimon came out and said, "No, we're fine. In fact, I'm going to spend $26 million of my own money buying Bank of America stock. I'm sorry, JP Morgan stock. I'm going to buy my company stock with my money. This is not a company buyback, my money." And guess what? The stock bottomed that day, the market bottomed that day, and went straight up for almost 18 months. Okay. What happened this year when the market was down 15%? He came in, instead of buying back his own stock, he said, we see a hurricane coming and it could be a bad one. And then a couple months later, when the market was down 25%, last week, he said, raise cash. If you need cash, get it now, because you're not going to be able to get it. I mean, there's a big difference. Here's the guy, the smartest guy, the most important businessman. I say just important, but he's somebody who sees everything. His businesses are touched everywhere in the world. He sees what's going on. He sees a recession coming. Right? In 2016, he saw just the opposite. So he bought his own stock. Today, instead of buying his own stock, he's warning us to raise cash and be careful. That's all I think we need to know. But let's take advantage of it. We've been taking advantage of it all year. And it doesn't mean the market's going to go straight down. We're going to take advantage of the bounces along the way. But nothing moves in a straight line, as I showed earlier.
Right, and you pretty much
road to here, and you need to be trading with somebody to do it. And it's not just me; it's a whole group of people in our chat room that really work together with it.
Yeah, there's hundreds of people there. It's an international community, and it's really a team effort there. Everybody, so you'll be a bunch of mini Matt Maileys there. But yeah, Matt. I mean, look, you trade around Fed meetings. You trade. The Fed has never been more important, or people have been talking more about it than ever than right now. A lot of eyeballs on it, a lot of traders eyeballs on it. So obviously you have to know, well, you trade that, right? You trade the volatility, but I just wanted to highlight really, kind of like, I mean, I wish I could just make a PowerPoint of where it all started, where the Fed was this is transitory. It's going to be transitory to soft landing to we're going to feel pain to like, I mean, so it's like, I don't know. I mean, I'm pretty sure they just do it to not spook the markets. But
yeah, I mean, yeah. For them to say, something, we're
misleading though.
We're in big trouble. We're in big trouble. Everybody get out. That would, you obviously don't want to have that. But at the same time, you'd like them to be a little bit more forthcoming with what they're seeing. And I just sit there, good.
Right, and as traders, really, that's why I feel the community is great, because we have your experience there, and we're not just victim to the headlines like many traders are.
Well, and that's what you got to look at. I mean, one of the best calls I made, and a couple of people in the chat room have told me, and I'm just going by what they told me, that I saved them a lot of money. Don't forget about making people money. Saved them a lot of money last year. because they sold their Microsoft stock right at the top. And the reason why that happened was that, what would happen, we saw in Thanksgiving time, I saw on the news tape, it's like Sergeant Nadella, I'm sorry, the CEO, who's a great CEO, had sold 1/2 of his shares. I was like, what? Half? And a couple of days later, he sold more, so a total of 2/3 right at the top. And I said right away, this is a selling point. He sees what the Fed is saying. He sees what's going on in the marketplace. He sees how overvalued his stock is. And he just sold $374 million worth of stock. Okay. Nobody sells $370 million. He had seen plenty of 10% corrections in his stock in the last decade. He wrote it out. No problem. It's coming right back. You don't sell that much of your, if you want to buy a $20 million house in Hawaii, yeah, fine. Okay. Sell $20 million worth of stock. Now, $374 million, something's going on. Okay. That's what a CEO does. Watch what the people, the insiders do. And I've said this so many times. It's like what happened in 1999, just before the big crash. I'm sorry, the big tech bear market. Goldman Sachs, all those partners, they went public. They sold their stock to the public because they saw what was coming. They saw that the market got ridiculously overbought. Blackstone, one of the best private equity firms in the world, summer of 2007, they saw what was going on. They sold their company in an IPO because they knew that this couldn't last that much longer. And they had made gazillions of dollars in a private company. The only reason why they sold is they knew their stock was overvalued. And I can go on and on. Sam Zell, he sold his company in a private transaction. His was a private company. He one of the, if you don't know him, he's a billionaire real estate man, but right at the top of the real estate bubble, he sold his company in a private transaction. It was his life's blood. I mean, it's what he did. You don't sell that when you're at the top of your game unless you know it's going lower. And Mr. Nadella saved himself $125 million by doing that. He did nothing unethically wrong. He just saw that his stock was overvalued, and he's going to get more stock at the end of this year as part of his compensation. He's done an unbelievable job turning this company back around, put it right on top again. And so what he did was the right thing. But when the smart people sell, these are the types of things that we try to teach people in our whether it be our Tuesday calls or just in the chat room overall, so that you can see that my experience is just some smart people sell. You pay attention, and I'll just leave this comment or this thought with one last thing. Just because a company goes public doesn't mean it's really bad news. Companies go public all the time because they're just, hey, we're growing so much. We need more money. We need to build 10 more factories. So we're going to, sell stock to the public. Because we're going to take the money and reinvest it into the business. It happens all the time. And also, you have to remember that when a company goes public, it's not always the founders, the people who are in the business, who are selling their stock. I mean, Bill Gates, when they went public, he only sold $1 million worth of stock. That was it. He said, I'd rather be buying. And they all joked. He said the reason why he sold $1 million was so he could move out of his mother's garage. But the point was that he was a buyer. He would rather be buying. And of course, he held on to it and made tens of billions of dollars. So again, I don't want to get too caught up in that. But just the point is, when Jamie Dimon's buying, okay, look what that did to the market. When Sergeant Nadella was selling, look what that meant for the market. That's the type of things that we're talking about that you don't get every day on the financial news networks.
Right. No, there's definitely a lot of things out there, Matt, that basically through your filter, right? And let's call it the Matt Maley filter, makes a lot of sense, right? You're explaining that. I want to give a big shout out here to our newest member, JXY. Welcome to the family. Let's go.
Great to have you here, and couldn't have picked a better time to join. We got this. Again, I'm not sure which way this is going to go right now, because I am still concerned, as you can tell, about the market going lower over time. But this bear market, some people are saying it's going to rally to the end of the year. I don't think it's going to last that long, but we could certainly rally over the next couple of weeks. And how things go tomorrow are going to be very important, especially in the next couple of days. And then, of course, next week we get the big tech stocks going to be reporting earnings. We're going to see how that goes. So we got a lot of stuff going on right now, and we want to be able to take advantage of it. And I think, and I know, I'm sure we will be able to, and we'll certainly be trading. We're not going to be sitting on our hands. As I said, there's going to be times when we would just sit on our hands. That's the right thing to do. Next week and the next week to 10 days, there's going to be plenty to do with all these different companies reporting, with things going on in the election, with things going on in China, things going on in Ukraine, Iran, et cetera, et cetera. It's going to be in the UK, et cetera. We got a lot of volatility in front of us, and we want to be able to take advantage of it.
Yeah, we definitely at least want to make sure folks know here. So basically, Matt, you're as a chief market strategist, right? You're analyzing international equities. I mean, I know that you've made trades on currencies through the stock market. So through your experience, you're able to trade these commodities and things that are happening outside the US because you keep tabs on it as a chief market strategist at Miller Tabak. That's just basically part of your regular stuff, right?
Exactly. And it's just, I mean, here, look at this thing we talked about. You just mentioned currencies. This is the DXY dollar index. It's an index of the dollar versus many different currencies. But let's see. Some people think it's going to. You can see it's starting to roll over a little bit here, but see how that yellow line there. That's the 50-day moving average. We'll see what happens over the next few days. But if it gets down to that 50-day moving average, I'll be looking to buy some call options on that. Before that, we might buy some puts because it looks like it's rolling over. Now, let me just open another chart. But we're always looking at wherever the opportunities are. I mean, they're not in Apple Computer every day. Now, they're not in Tesla every day. Here's the thing again, with the MACD chart. Remember we talked about that MACD chart earlier? And see, we just got a negative cross on that MACD chart. That means the dollar probably be heading lower. If that's the case, that means bond yields are probably heading lower. That's probably bullish for the stock market. So even though I'm bearish and I think we'll see lower lows eventually, we can see, a bull market. I'm sorry, we could see, more bear market rallies, and we want to be able to take advantage of it. I just want to show one thing I showed the people in the chat room, on our Zoom call today. Look at this here, Apple Computer last year. Remember how, here we go, pull it up. This is Apple. Actually, I'll just go through. I'll just go through the end of the year last year. So here, 2021 for Apple Computer. Look at this stock. It had nothing but good news. The stock market did nothing but go straight up that year, right? And then it only had one correction of 5%, and that only lasted for 1 day, 2 days, something like that. Oops. But look at this. Now you got to the high at the end of the year. Stock was up, well, it's actually closer to 40%. Stock was up almost 40%. My starting point was in December, which was wrong. But anyway, stock is up 40%. One of the best stocks in the market in 2021. The overall market did great, but look at all these declines. 20% decline, 10% decline. I think that was a 12% decline. I think this was actually a 7% decline. This was a 12% decline. This was like a 9% decline. Okay, even though the stock, and you think they go, oh, what are you talking about? Apple rallied straight up last year. Actually, it didn't. And we took advantage of a couple of these pullbacks. That's what we're looking to do. Even though I'm bearish on the market, even though I firmly believe we'll see lower lows, the market could see, and again, this is just the opposite. Here, where they were pullbacks in an upward trend, now we're seeing bounces in a downward trend. And we're going to be able to take advantage of that if the indicators that I look at and the other people in the chat room look at come to fruition tomorrow. One of the things I'm going to be looking at is the bond market.
Yeah, go over some of the, because I know there's a lot of charts or things overall. What's going on in Matt Maley's chat room right now?
Yeah, well, we talk a lot about one thing that we see is that in this, let's see here. Remember we talked about the RSI, right? The RSI. Okay, now, relative strength index. See how it's getting oversold? This is the TLT. Remember when yields, when prices go up in the bond market, the yield goes down, the interest rate goes down. When prices go down, the interest rate goes up. And that's just a rule. It's not a tendency, it's a rule. When you think about it, when you buy something, you buy a bond, and you hold it for 10 years, a 10-year bond, and let's just use round numbers. Okay, you buy it, you always buy it when it's a brand new bond, you buy it at $100. They always issued it $100. And let's say it pays a 10% yield. Well, okay, that's great. But what happens over 2-3 years later? The stock falls to 90%. Well, that 10% coupon that you get every year is still you're still getting $10. You're still getting that $10 coupon. But if you only paid 90 cents for it, your yield is higher. Same thing if that $100 bond goes to 110, you're still only getting still getting that $10 coupon. Okay, that's less than 10% because you paid $110 for it. So it's a mathematical thing. It's not a tendency. So But my point is that look what happened here. Let's get rid of some of these lines. It gets too busy. But see here, let's see. I just remember this here. Okay, this rise in the TLT. Okay, that means the price went up. That was in late February, early March. Okay, so that means yields went down. Same thing happened in May, right? And the same thing happened this summer. Okay, where we had a nice rally. That means the yields went down. Okay, and what was that? What did that do to the stock market? Well, let's look at the, whoops. Index GP. Remember, we talked about how yields went down, right? The price went up, yields went down in February into March. Look what happened. Stock market rallied 10%, right? Nice 10% rally there. What happened in May? Remember we said the price went up in the TLT and the yield went down. What happened? The stock market rallied. What was that? I think it was 9%. Let's just, oops. Maybe it might not have been 7, but yeah, 7% there. And then over the summer, remember again, the TLT went up, yields went down, and the stock market rallied 18%. Okay, so well, 17%. I would say 17 to 18%. So right now I'm waiting to see, see this little thing in the, I'm sorry, whoops. Let's go back to the TLT. Okay, so the TLT is, we'll go back to the RSI. It's very oversold. It's oversold. But look at the weekly chart, the weekly RSI chart. Way oversold. Look how far it is below that line. This thing's getting really ripe for a bounce. So if the TLT bounces, that means the yields go down. That's going to be bullish for the stock market because it's been bullish for the stock market every time this year. So that's what I'm watching very, very closely in the next couple of days. We obviously have some really important earnings come out. Tesla comes out tomorrow. Actually, it's after the close tomorrow. Of course, next week we got Apple, Microsoft. We got all sorts of important earnings coming out. But what the market has really moved on has been the bond market. And if the bond market is going to rally, if the prices are going to rally and yield is going to go down, we are going to see, we should see a good short-term, another one of those rallies. We've seen 3 or 4 of them this year. Two, the biggest one, of course, was the summer. We've seen several of them. I want to be able to take advantage of it. I'm going to be watching that bond market like a hawk. And, oil prices are coming down. That would help the bond market as well. So we got a lot of things going on that could give us this opportunity. But I'm not ready to pull the trigger yet. We did buy some calls today at the end of the day on the TQQQ in the chat room. We also have some puts to go out a little bit further as a hedge. But we're going to be jumping all over this in the next couple of days if we do indeed see this rally in the bond market. If we do see yields start to come down, see that 10-year yield get well below 4%, that's going to help the stock market rally, at least over on a short-term basis.
And folks, listen, don't stress, okay? I'll show you the chat room. Don't worry. I'll show you the chat room once, we get, wrapped up here with the session. But, we have to, take advantage of Matt while we have him here. So let's do something here. Last call, basically here, for Ask Matt Maley your question. All right? Throw your questions in the chat. Keep it to stocks, okay? Let's keep it to stocks. And basically, whatever it is, any particular question you have about the markets, about a specific stock, and basically what Matt's going to do here, basically, this is just like we would be in the live room, basically, right? So go ahead, folks. Last call, put your question in everywhere, YouTube, Zoom, everywhere that you're looking at this. Matt, in the meantime, what's your forecast for Tesla? Do you think there is a possibility to buy Tesla under 100?
Okay, this is going to be, that's going to be very interesting. Just before we do that, you can just see that, remember, see how oversold I said on that TLT? Okay, more oversold than has been any time, even more oversold 2021, more oversold as ever been. But let's go back to Tesla because I know a lot of people care about that and they're reporting tomorrow, right? That's going to be really big. Hold on, TSLA. Now, my big concern is, yes, I do think it can get below 200, below 100. Oh boy, that would be, that could happen, I suppose. Whoops, hold on a second. I wanted to go further back. I'm sorry. Okay. Look at this. I got so many lines in there. Let me get rid of them here. But you see, it's coming off an oversold level, right? And this is why, again, something we talk about, a 200-day moving average. I'm not going to care. Here we go. This is really what I'm looking at right now. there's so much negative news out there on this thing. I'm very worried about it. Don't get me wrong, because he's too caught up in what he's doing with Twitter. He is going to be on the call tomorrow from what the company's saying. But but he's definitely, his focus isn't there, but the stock has come down an awful lot. The other thing though is Tony Sacconaghi from Bernstein, one of the best analysts, tech analysts on the street. He's seeing a slowdown in demand in China. That's not going to be good. And of course, we saw recently that their third quarter deliveries were lower than estimates. But a lot of negative news is out and the stock's down a lot. The stock is coming off an oversold level. And this is what we call a descending triangle pattern. Okay. See, it's one side is going, and we can see that every time it gets down to just above 200, the buyers come in. And if finally it breaks below 200 in any kind of meaningful way, we're going to realize that the buyers have given up and this thing's going to fall hard. Tony Sacconaghi was talking about $170 that he thought the stock would fall to. But my feeling right now is that we'll probably see a bounce first. You know how Musk, he's a genius at PR, and he's going to try to spin this thing very, very positively. No guarantees by any stretch of the imagination. But I think this thing could initially see a bounce. Eventually, I do think it's going to break below it. I just think, they're high-priced cars. And again, I look at so many different things. Look at the fundamentals, look at the technicals, look at positioning, look at some of the positioning issue here. If he's got to sell more stock to pay for Twitter, that's going to be a problem, right? So we got all sorts of issues going on there. But again, high-priced stocks, demand for cars is going down, and it's going to go down for all cars. If we go into recession, which I think we're going to, even the high-priced cars are going to have some problems. I think the stock will trade down, certainly below 200. Get below 100, it's certainly possible, but that would be really tough. I mean, I guess my point is, between now and anytime you get a chance to buy it below 100, you're going to buy and sell it several times before then, and in your trading account. For long-term holders, this is kind of, in a weird way, this is, let's say it's a head and shoulders pattern. Lots of things going on here. This stock needs to hold. If it breaks below 200 tomorrow night after these earnings report, it's going to be a big problem. Personally, I think it's oversold enough that it will probably see a bounce. And you just, again, look at this RSI chart. Look where it's been. See what's here, followed by a bounce. Down here, followed by short-term bounce. Over here, followed by a bounce. So we're at a level which usually followed by a bounce on a technical thing, but the fundamentals will trump all. And if he's got to sell some stock. So I guess my point is, if you want to buy stock here and buy some calls, I wouldn't spend a lot of money on it, and take your profits quickly if you get them after the earnings, because it's going to be at some point, I do think it's going to break down from there. Anyway, some other names that people want to ask about, or
right. So we have here, Ram, looking at TXN.
Texas Instruments. No, TXS. No, Texas Instruments. Okay. Now, like all these chip stocks, it's been beaten up pretty good. Now, it's not crazy oversold, not as oversold as Advanced Micro Devices, but let's look at its daily. I'm sorry, pardon me. It's weekly RSI. Boom. Even that's not too bad. But look at this. It's trying to hold its 200-week moving average. This is really key. And so if we get some, if we can get, remember I talked about that bond market, the TLT. The TLT can rally, and which means interest rates would come down. That would give the tech groups a lot of relief, even though the situation on the fundamental side is not good at all. Okay, let's go back to the daily chart. So you can see that I like Advanced Micro Devices more as a play here, because I think because it's more oversold on a technical basis. Now it's kind of, the thing is, see how it's gotten up to here, 3 out of the last 4 days, it's gotten up to the 156, 157 level. If it can finally break above that, it's going to be very bullish for the stock. And let's just look at the MACD chart. And see how it's had a couple of head fakes. If you can finally get a positive push and a move above 157 would probably do that, this stock would be good. I guess my point is, what I'm saying is that I don't like the chips. I think demand is really down on an intermediate term basis. But short term, they're pretty washed out. And if we get any positive news on the bond from the bond market, positive movement in the bond market with yields coming down, that should help this stock bounce nicely. So I'm leaning much more to the bullish side on a short-term basis on this. But again, I'll be watching that bond market like a hawk. If we don't get the relief from that, all bets are off.
Okay, all right. Then we have let's see, Eduardo, what do you think about TSCO?
Okay.
Right, and I did forget to mention, anybody that does sign up live will get additional trade alerts from Matt.
Okay.
And also these particular trades that we're going over from you guys in the chat, if there is an opportunity, something like Tesla, like, of course, you know, Matt's looking at it. Like if there's something
We're
that,
looking at Tesla every day, all day. That's for sure. Yeah.
yeah, no, I mean, you already regularly do. I feel everybody looks at it at least once a
Yeah.
day. Okay, so yeah, basically, if there's a good trade idea or something like that, Matt will be following up in the live room with the specifics, right? Entry, exit, just like he always does.
Right. Now look at this one here. This is a very interesting chart because the stock, a little over, towards the overbought subside, but it's not crazy overbought by any stretch of the imagination. Whoops, what happened to my little screen there? It's freezing up on me. Hold on, let me. Okay, there we go. Hold on a second. You can see my little circle there. It means my screen is freezing up. But you can see it. I won't draw it. But you can see how, first of all, this is the 200-day moving average. That's what that purple line is, right? Let's see if I can do it here. See if I can get this done. I'll do it correctly. Okay. That didn't work, huh? Hold on one second. I'm gonna try one more time. Bang. There we go. Let's see how this stock, it's a little hard to see it there, but this stuff, no, it's not so hard. Let me just get rid of that little red line that kind of makes things. There we go. And I'm gonna get rid of this. But look what's going on with this stock. It's if anything's a little bit overbought, but not something we have to worry about. Okay. But it's been in this sideways range. And look how long it's been in a sideways range. 1, 2, 3, 4, 5, almost 5 months. So this is getting poised for maybe a breakout, but we have to wait. See, I drew the line. The line should be a little bit higher because the top of the line, it should be a little bit higher. So I'm just looking at the, I'll get this out of your way in a second. Yeah, $206 level. You break above that, you're going to break out of this side chain. Whenever something gets stuck in a sideways range, whenever it finally breaks out of that range, the move, whatever direction that breakout takes place, usually it tends to be a big one. The longer the range, the bigger the breakout. This one's went and won for 4 months. Not only that, it's bumping up against its 200-day moving average. Now, see how the 200-day movements, look at this, how the 200-day moving average. Here's something we have to learn. One of the most important rules in technical analysis is old support becomes new resistance. Okay, and you can see how there's something on my screen that you guys can't see that's getting in my way. I'm sorry. Gosh darn it. Okay, there we go. Okay, see how the 200-day moving average got below, but it snapped right back. It broke below it here and it stayed below it all that time. Okay, it's bumping up against it. If it 200-day moving average is a big one in the street. So you'd have a double bullish move here, a breakout of a sideways range and a break above the 200-day moving average. That should give this stock a big move, but you got to get above 206 and you got to do it. And you can't be $206.10. It's got, be about 1% or 2 above that level. Get above you get above 208 or so. Let's say 2. You get above 208 or so, you're going to be, this stock is really going to run. And all those algos that are mechanically driven, those computers are going to say, buy this stock, and this stock is going to run. So, and of course, the problem is you have to wait for it, because if it rolls back, and if it fails, this is one of the things, if it drops below 200, then you can make a bearish bet because it's probably going back down to the bottom of that range. So we don't want to jump the gun. But so I'm looking at 206 on the upside, 200 on the downside. Whichever way that breaks in the next couple of days should tell us where the stock's going to go over the next couple of weeks.
Right. Then Salim with Netflix. And I know that we talked about Netflix a while ago, and we were talking about how strong is the consumer really? Because again, right, the mainstream media or news, whatever you want to call it, like CNBC, Bloomberg, they're all like it's they're doing amazing, right? But then we found out that not so much, right?
Right. And the thing though, the thing with this one is there's so much, and I say caught this one right today. I had been, and I had been very cautious on the stock. Well, I was bearish on it through the first half of the year. And even if it bounced up, I just didn't like, but same thing. See how it's been it was in a sideways range, and when it finally broke out of that range, I was like, well, only rallied a little bit. It's not that big a deal. Well, actually, when it rallied a little bit, it did rally, boom, 24%. You bought the call options. See this one? Bang. See, it was in this range. Broke out of that sideways range, right? And it rallied 24%. Now it got caught in another range right after that. So let's do that again. Now we're in another sideways range, and we're right up against the top of it, right? But what I was saying to the people in the chat room today is like, I'm not as nervous about this as I had been. Why? Because so much negative news has been out on this thing. I said, if they report more negative news, people are going to say, yeah, right, whatever. I've had enough of it anyway. And most of people have already sold. There's not a lot of leverage in this thing. Well, guess what? They reported good earnings. Last I saw in the pre-market, it was trading up 12%. So it's going to trade above this thing. That means if it's up 12%, it's going to be up 25%, not necessarily tomorrow, but quickly. And this is going to see a nice run here. So I like Netflix here. Then remember that news came. Or again, let me just go look at it real quick. Well, I won't look at it now, but anyway, we'll have to double check, and we'll know tomorrow morning, because if the conference call comes out and they say real negative things, because I've been in this meeting here, I haven't heard about what happened on the conference call. But this thing should be breaking out of its sideways range again. This is going to be bullish. That's why, and I did go in and buy the Netflix options, but we did buy were some TQQQ calls to try to take advantage of it. So what I was looking for is both, number one, seeing that the TLT bond market looks like it's going to rally. We get some, and what my thinking was, again, just based on experience, is that there's been so much negative news. Unless it's really disastrous news, the stock's only going to fall a little bit. If it's good news, the stock's going to explode to the upside. And it doesn't have to be great news, it just has to be good news, because the stock's down 8 million%. And so, I mean, it hasn't had good news since God was a child. And so now that it finally got it, it's breaking out. And again, some shorts are going to get squeezed and the stock's going to rally. And hopefully it's going to help our TLT calls that we bought late today. And it's not a stock that I like on a long-term basis. They got a lot of competition, a lot of issues, and consumer demand. But again, this is a situation where just because the fundamentals don't look good doesn't mean the stock cannot rally, at least over on a short-term basis and on a tradable basis. I'm not talking about next 3 hours. I'm talking about next couple of weeks and maybe even next couple of months.
Right. Then we have Melissa, member here, asking for EQT. I guess that's kind of a good leeway there into the energy. I don't think we discussed that too.
Right. Yeah, we definitely talked about that. EQT. Okay, hold on.
You see how committed Matt is, like, to be here, literally going through your questions, talk about trade ideas, markets, like, big shout out there, Matt.
Nice, buddy. Okay, EQT. Now these guys are heavily weighted, heavily leveraged to the natural gas. Hello, natural gas market. Okay, now let's look at the stock technically, and then we'll talk about the fundamental aspect of it. And again, remember we talked about that descending triangle pattern that I talked about earlier? Well, for this stock, is an ascending triangle pattern. Bang. Let's get the bang. Bang. Okay. Okay, this is an ascending triangle pattern. So this thing breaks above 50, it is going to run. I call it a Beach Boys stock. For those who are a little bit older, they know the Beach Boys. They run till the daddy takes the T-bird away. That's a song from even before my time, but it was a famous song that my older brother used to play all the time. Anyway, on his radio, on his record. record player. So, but it's down towards the lower end of that. So a little bit worried, but let's look at natural gas. This is the commodity. Whoops. So I'm looking for what 50. Remember that level 50. We break above 50, this stock is going to run. Okay. Now let's look at natural gas. We can also look at the natural gas ETF, which is UNG. Hold on. Boom. Okay. Now I've been saying, see, it's getting oversold. And it's below its 200-day moving average. I'm kind of thinking it probably gets down and tests its July lows. But on the fundamental side, there is not enough. I mean, LNG, liquefied natural gas, they're gonna have to take it from somewhere else. And I know that they've been storing a lot. It's going well. This is more of a technical decline. I strongly believe, especially once we get past the election. And I'm not blaming Biden. When we talk politics, I talk about why I think it's going to happen, not because I think, if I say, hey, I think this person is going to get elected, therefore we have to, it's not because I think they should get elected. I'm just saying, so I think that it is going to happen. I'm very confident that once we get past the election, the Biden administration is not going to care as much about the price of oil for a little while. And right now, right now everybody talks about, well, the stock market does better into the election. That's going to help them now. The number one thing that decides the polling for the Democrats and for President Biden and his administration is gasoline prices. And he came out today, late in the day, saying he's going to go back to this strategic oil reserves and tap that again. Why? Because the election's coming up. And he's saying, well, it's because I want to get it back. I want to push oils down so we can buy our oil back up, buy up oil at lower price. Yeah, whatever. The Saudis and OPEC have basically told us they do not want oil below $80. Will it dip below that between now and the election, which is only 3 weeks away? Yeah, sure, it could, but it's going right back up. As soon as the election's over, this stuff, they're going to stop caring about as much. Not saying they're not going to care at all about it. Don't get me wrong. Just saying it's going to be less important to them. And again, they'll want it to keep from going to 100, from oil going to 120 and natural gas going through the roof, but they're going to care less about it going up a little bit. They're not going to be, I guess, they're not going to be doing everything they can to push it down. So I think that EQT is something you want to hold off for right now. And once we get past the election, and you see, so won't the markets are forward thinking, yeah, but when it comes to things like this, when they're artificially trying to push something down, they can keep it down. That will keep EQT down. But I think it's going to be a great opportunity to buy this stock. And I don't mind buying it right here, nibbling at it. But I think when you really want to get more aggressive is after, just as we're getting, maybe even just a few days before the election, just before they stop caring about oil prices anymore and natural gas prices. And again, I like natural gas overall. So I like EQT. I like LNG, but LNG is a little less, it's not as oversold. It's not as beaten up as some of the others. And Kinder Morgan, which is really one that they make all the equipment for natural gas and stuff. So that's another one. I forgot the.
Right. And Fred there says, I really like this guy. He's a real trader. Good stuff there. I mean, Matt does have a trading background, not just an analyst background.
Absolutely.
Let's see. Then we have here. So Daniel, I guess that more or less kind of goes with the. Let's see. We have Gus from the YouTube side asking for Google.
Okay, Google. Okay, we want to talk about this one on both a short-term and long-term basis, because I love this stock long-term. Okay, now. Okay, whoops. No, actually. Okay. Remember this MACD chart that we talked about? Okay, we got a positive cross on the MACD chart. This is looking pretty good. Okay, now the stock broke out this morning, then came back down. When the whole market came back down. But see how it's trying to form a base here. It's a little kind of mini double bottom. Okay, so it tried to stabilize during the summer when the rest of the market did finally rallied a little bit and rolled back over when the rest of the market rolled back over. Let's get rid of some of these lines so it's not such a busy chart. Okay, now, so we kind of have a mini double bottom here. And if we can finally make a higher high, in other words, we can get above the highs from today, it's also going to take the stock above its trend line going back to those August highs. See that? See that trend line there? We're getting above that. So if we go double bottom, we avoided the lower low. You say, oh, geez, wait a minute, that was slightly lower. Yeah, very slightly lower. That's the same as saying it's a double bottom. Follow double bottom with a higher high. That's going to be bullish on a near-term basis. We already have a positive MACD cross. That's good for us. And so I'm looking for this stock. You get above, let's see, what was this intraday high today? Whoa. Okay, there we go. 103.50. So $103.50. Especially if we close above that level, this stock is going to run. And again, I'm going to be looking, again, it's tech stocks. We'll be looking very closely at what's going on with the bond market. But the thing, so that's why I like it on a positive side. The technical side of things, I like it. Longer term, this stock is trading at 17 times earnings. It has only been cheaper 3 times. Okay, actually only twice. But one time was during the great financial crisis lows, and the other 2 times was in 2011, 2012. It was really it was the European crisis. Remember when Greece was losing their was going to default on their debt. So it happened twice in a couple month period. But that's the only 2 or 3 times that it's been cheaper than where it is right now on a PE basis. Okay. I hate to say it, Apple is actually not a cheap stock. It's not anywhere near as expensive as it used to be, but that stock usually trades down to the mid-teens on its PE. You're still above 23. Okay. This stock is. So on a longer term basis, if you want to, in your big account, your long-term account, you should be buying this stock every month, once a month for the next year. Because I'm telling you, it's cheap. I think it'll probably, because the rest of the market's going to have to go down, it will make a lower low at some point. But I don't just take,
right.
Hey, I'm going to put X amount of dollars, buy every month. Your average price 3 years from now is going to look fabulous. So you want to buy it here in your trading account. If it gets above 103.50, in your long-term account, you want to buy that at least once a month, every month for the next 12 months. And I'm telling you, long-term, you're going to thank yourself.
Right. Interesting there. And that's what I do like, that you did give a full review for people as well to own stocks as well. Sean in the house, Shopify. I know that stock has been destroyed. But still a good business. Still a good business.
Yeah, let's see. Here's another one. And again, we've talked about this. Funny, I talked about it with some customers on the institutional side about a month ago, and I said, they're asking about the technicals of it, and I said, well, again, you go back to this, see this sideways range, and it did get above 40, but it's basically between. 25 and 40, and until this thing breaks above 40, I'm just afraid. It's just dead money. Now hold on a second though. Let's look at the. Okay, hold on a second. Just take a second. SHOP, equity, and it's just trying to turn up a little bit. Let's look at this. Yeah, even its MACD chart. I mean, it's just, there's nothing there. It gives all these head fakes. So I'm starting to say I say 40. Well, geez, that's a long time to wait. And it's much lower than that. But again, it's in a sideways range. It's not oversold. It's not overbought. It's just a stock until number one, unless we get some really good news on the fundamental side, some new news, but on the technical side of things, it's just been stuck in this sideways range. And I just, and I got to tell you, there are times this just happens and people ask me, what do you think of this? What do you think of that? Sometimes I'm like, sometimes I'll just say, I don't know. Or like, for instance, if I just don't know the stock very well. So I'll be honest and just say, I just don't know the stock. And so I'm not going to lie to somebody and tell them, just because I think they want to hear something. But here, let's see, it's even just a downsloping range. But see, we got to break out of this thing to the upside. It's just been dead money. Now to trade it, it's at the lower end of that range. It looks like it's trying to do better. When do they report? I'm pretty sure they report this week, don't they?
Now, do you think we're gonna have surprise earnings and suddenly all these companies are gonna beat? Is it possible?
Yeah, I mean, yeah, sure, it's possible. They don't report for another week. It's possible, but I just don't see it. I mean, believe me, we're going through this thing, and they've lowered the earnings enough, earnings estimates enough to make, because they do it every single quarter. They beat, because at the last second they lower estimates enough so that they're beat, so that the most companies beat. And we go back every single month. I mean, I'll go back and say, and the worst part of the great financial crisis, they still beat estimates every time. Okay, even though earnings were down and down a lot, they beat their estimates because at the very last second, the analysts lowered them enough to oh, look at that, they beat my estimates. Great. Well, that's how helpful those Wall Street guys are. But I should say I've been working with them for 40 years, but a lot of good people on Wall Street. But it's just a game that they play, and the real thing is the guidance. The guidance, a little bit better, and then the stock will move up a little bit. And it's again, you get some good things like what happened with Netflix today. Yes, that could happen, and that's one of the reasons why I still think we could get a further bear market rally. I just don't think it will last very long, because when people wake up to the fact that 2023 earnings are going to be bad, and again, on CNBC and Bloomberg, they're saying, "Hey, don't worry, it's not a debacle. Everybody said it was going to be just a horrendous earnings season, and now it's not so bad. Earnings are coming down, but it's not so bad." Now, you don't need a disaster in earnings coming down. You do not see them have to fall out of bed. All I need to do is fall 10% next year, and we got problems. So that's been your question. But anyway, here we've been doing this about 2 hours. We can maybe one or two more, and then we'll wrap it up. But is there a couple more we want to do?
Right. No, yeah, we definitely got a couple more here. Really quick though, what's your target for the SPY for the end of the year?
It's funny because I'm not a big. The end of the year doesn't really mean anything. I mean, I know why people have to do it, because for their marketing purposes. My feeling is that that what's going on. I think that the bear market will go down to at least 3,000 to 3,200 before it bottoms. Right now, this rally here, what I'm watching right now on the S&P 500 is 3,800. We could break above 3,800. We could get that. There's a few people calling for a rise to 4,100, 4,000, 4,100. That could happen. Why could that happen? Even though the economy stinks. Well, if the market starts to rally and interest rates come down a little bit, just simply because of for technical reasons, what happens to the institutional investor? The institutional investor might think that the market's going to zero in January. That won't matter. Okay. Because their bonus and their job in this year it very well could be their job. Could depend on them. If this market starts rallying and we make a double bottom low here and a higher high, and this thing looks like it's going towards 4,000, and they all have more cash than they usually have. If they're sitting on a lot of cash, their job is going to be in jeopardy. So if you're working at a mutual fund, if you're working at a hedge fund, and you're sitting on cash while the market's rallying at the end of the year, that's a great way to get a lousy bonus or get fired. So we could get that rally. My thinking is we probably stop at 3,800 and roll back over and make lower lows. But again, because I'm an active trader, the stuff about the end of the year, I don't really care where it goes at the end of the year, because I'm going to react to whatever happens whatever happens at 3,800 is going to be what happens next. And down the road, we're going to go lower for all the reasons I've been talking about. We're going to eventually go lower. Do we go to 4,000 before we do that? We could, but I think we're going to get down to the low 3,000s. And this is unlike most people. I know Mike Wilson of Morgan Stanley. He's been very good all year. He and I have been in the same boat. He obviously has a big following, big firm like Morgan Stanley. He's very good. But my point is, I haven't just jumped onto this bandwagon. I've been talking about this all year. I was talking about a recession at the beginning of the year. I was talking about a bear market at the beginning of the year. And during the entire summer rally, I said, this is a bear market rally. Do not chase it. It's all worked out very well. I do think that if we do get a further rally, whether it's because there's some liquidity added to the system to help for the election, or to help with the situation in the UK, or to help with the situation with Credit Suisse, I don't know. Maybe that helps the market rally a little bit. But we are not out of the woods. This is the second leg of a bear market. This bear market rally is not going to last anywhere near as long as the last one, and as the one we had over the summer. And it's going to roll back over. And the second legs of bear markets, that's when things blow up. That's when the Credit Suisse thing becomes a big issue. Credit Suisse was not a Lehman moment. When it happened, I said, it's not a Lehman moment, it's a Bear Stearns moment. It's the one that happens first. It's down. The the Lehman moments happened almost right before the bottom. Okay, that's when the big flush takes place. So I know we're still a ways away from that. So that's my answer to that question.
Okay, okay, all right. And we have Daniel, only because you put a smiley face, all right? INSW. I'm not sure what this is. International Seaways. Looks like it's been ripping higher.
IMSW.
INSW.
Okay. Okay, great. As I said, I didn't know. Oops. What happened? Oops. INSW.
Yeah, Donald. Matt is trading the SQQQ pretty much daily.
Yeah, they do the TQQs are, and we also do the SPYs, but they're just that the QQQs are more volatile, so they tend to be more profitable. And I like the TQQQ more than the SQQQQ because the options tend to be cheaper. But this one's getting quite overbought. See this see the RSI just like it was here, and they think, well, geez, it only fell a little bit. And that's fine. And again, I'm not saying I'm saying there's anything wrong with the shoot, my thing's freezing up here, but see, it did again. It's been obviously, and it's had this great run, but you can see this one was a bit of a pullback. Here it was just short-lived, the pullback, but it looks like we're getting ready. And look at another one we like to look at. Okay, equity, the Bollinger Bands chart. Now look at this, and I'm going to look at it on its weekly chart too. Bollinger Bands, you're not familiar with it, but that's all right. No, it's not quite there on the boat, but it's still, it's just, you can see how it's getting very overbought. I definitely don't want to be chasing the stock here. Do I necessarily want to make a big bearish bet? But what do you see how the stock for 2 days now, it's been above the top line on this Bollinger Bands. And what that means is that it's trading more than 2 standard deviations above its 20-day moving average. It's 20-day, not 200-day. And you see what happened here when it did that? It fell. Here, it just got a little bit above it, but this is 2 days in a row where it closed above it. It's just, again, between that and the RSI chart, it's getting overbought. It's just something I'm not real familiar with the stock, so I'm just looking at it on a okay, Orange Investments. Yeah, these transportation things, I like these stocks. And I think they're going to do real well. I just think that they got a little ahead of themselves on a near-term basis, so you want to be a little careful on that. And you might, if you like the stock, you want to add to it, or you want to looking to buy it, you might want to. It should pull back at some point soon, and you get a little bit better opportunity.
Right.
But it's 6 times earnings. It looks like it has a dividend. 1% dividend. That's it's a good play.
All right, Daniel, there you go. And the last one here before we wrap it up, and then I'll show the chat room here really quick with some of the trades and things from Matt. We have Sir with Amazon.
Yeah, Amazon is it's another one of these lines. I mean, again, stock's not with 70 times earnings, something like that. But I hate to say it, but this thing, it's an unbelievable company. And I do like the new CEO. He's the one who started the cloud business. I mean, he ran their cloud business. But look how badly it's underperformed. See, when the market was going straight up here, let's get rid of that. But I like why it's underperformed, because he's investing into parts of the business that are really going to help them in the long run. And that's what they've been doing for their 3 decades they've been around, almost 2.5 decades they've been around. See that? And when the rest of the market was rallying straight up, this stock was going sideways. But higher, I say, try to make a higher high than low. Try to make it just can't seem to get above its 200-day moving average since the beginning of this year. That said, it's trying like heck to make a higher low. This would be the first higher low in a while. If this market sees a rally, this thing is going to get at least to its 200-day moving average. That's $134. So if you're looking at the options in this one, if we get some positive movement in the market, it's just, again, positive movement in this the TLT, which would take interest rates down, which should give the tech sector a good boost. Then you're suddenly looking at hey, maybe I'll look at going out a couple of weeks, maybe I'll look at the $120 calls. A little out of the money. Where are the $120 calls? There we go. 100, something like that. Now you might want to look at those. And of course, Amazon now, like a Tesla with the split, their options are a lot more more reasonable for you to buy. And so, that's what I like. But I like the fact that it's making a higher low. And again, I'm leaning towards that this bull market rally, this bear market rally will continue. I think the stock will run up to its 200-day moving average. Then you got to take another look because it's had a really tough time getting above that.
Right. Okay. No, interesting stuff there. Folks, so if you guys definitely want to trade with Matt, join the live room there. We're posting the link there in the chat. Matt, any closing remarks here on today, and also what you'll be looking for in the chat room tomorrow for all the people that just joined?
Yeah, there'll be while we're this is such an incredible time in the market. The volatility has been, today was kind of a crazy day. It was a real crazy day. And the so we'll be looking tomorrow at how Netflix acts. Does it keep that that upside follow through that we saw after the let's see here, after the let's see if I can pull it up here while we're talking. After the close. I'm just gonna pull it up real quick if I can. I can't. Okay. But anyway, so we'll. But what I'll just say is that oh, here it is. I'm just, because my Bloomberg is kind of locking up on me here. I just want to. I can use this to pull it up. Okay. And FLX. But okay, so let's just talk about it. So we got all sorts of things going on. Obviously, what's going on in the market. We're going to be watching to see how the bond market acts. That is going to be, here's Netflix after hours still trading up 14%. So their conference call must have gone well. That should help the NASDAQ do better. That should help, and again, the overall market, overall NASDAQ market do better. That's going to help the Amazons of the world. That's going to help a lot of these names. But I'm still going to be watching this bond market very, very closely. If we get any relief, get that 10-year yield down back below 4%, get the 2-year yield, which people are really paying much more attention to lately, get that back down. It doesn't have to fall below 4%, but get it back down a little bit. That's going to give the tech stocks a rally, and that's what we're really going to be watching very, very closely in tomorrow's chat room. And then, of course, tomorrow night, we're going to get the Tesla earnings. We'll see what happens there. That's going to have an impact as well. But right now, I mean, people are talking about the earnings, and we'll be looking at those earnings very, very closely. But watch that bond market. The rallies we've seen, really 3 rallies we've seen this year, have all been fueled by a dip in interest rates. If we can finally get that dip in interest rates, this rally will last. If we don't, it won't, and that's going to be the key. We'll trade it accordingly.
All right. Well, there you go, folks. Matt Maley, Chief Market Strategist there at Miller Tabak, and lead trader at the Stock Picks Inner Circle chat room. Matt, thanks a lot here for everything that you're doing for the folks. Big shout out there again.
Thanks, Rodrigo, and we'll see you all in the chat room, and good luck. It's going to be a great rest of the year, and we're really going to be, we want to take advantage of it, so I hope you'll join us. Thanks again. We'll see you in the chat room.
All right, there you go. Thank you, Matt. Well, for all you folks that joined, remember, be there tomorrow, pretty much like about 8:30 a.m. Eastern till about 5 p.m. Eastern. That's when Matt is in this chat room, the Inner Circle chat, where everybody's posting back and forth. So there's 2 channels, right? Inner Circle chat and Matt's important messages. So in the Matt's important messages, you have push notifications available. You can download the app, set it up, and it is working. So yes, it is amazing. So pretty much every entry, every exit, you can see it's pretty, you get the alert right there that something was posted there, right? And a market commentary right here. There are several reasons to think this rally could last for a while. So a full explanation of what's happening, right? You don't have to be looking at the chat room the whole day, but a lot of people do enjoy the conversation, right? The community. I can't talk about the live room here without talking about the great people we have in there. James D. I don't know if he's watching, but James D. definitely very active there in the room. Of course, you have several other people there. This chat room pretty much started out about a year and a half ago or something. I launched it with Matt, and it's been really great. It's amazing. There's hundreds of people there, and we have this session on Tuesdays from 11:30 all the way to about 12:30 around there, every Tuesday, just for the chat members. It's a Zoom call. Basically, Matt reads questions and things like that from the Zoom place. So it's very engaging, right? The push notifications, Joe, are only going to be for Matt's important messages. right? So when he's pretty much putting an entry, an exit, it's not going to be when everybody else chats, because then you would get way too many notifications, like hundreds of notifications. So yeah, that's why we right now there's about 130 people that are online on the chat room. Again, it's pretty simple to have this chat room open and make these trades. It just can't get any more like any, like you get the exact strike price, symbol, expiration, and risk management. If you're scaling in, scaling out, that sort of stuff, buying puts, all that sort of stuff, right? So these are going to be sent to your phone. You just get the app, and the session's going to be on Zoom. So for everybody that did join, just know you will get an email, and in that email, you have to put, it's like for the laptop, right? So you put the address that you want the laptop to be shipped to. It's going to be an email. It's automated as soon as you sign up there. And everybody that does join also will get like additional trade alerts before midnight, pretty much, right? If you join before midnight as well, you're going to get basically the trade alerts there. Shout out here, Jackson, welcome here to the family. Let's go. Let's go. All right, so Jackson's in the house. Remember to check your email, okay? Remember to also be there tomorrow early in the morning so that you can also, get the market, the early market commentary from Matt throughout the day. And yes, it's open Monday to Friday. Kurt, let me put this, the thing there for you. 1 second. All right, so use that link and I'll put my contact there if you have any questions. But basically, just make sure that for those that did sign up, that you fill out the form for the laptop and that you're there and you're able to log in. If you can't log in, just reach out and I'll help you get in there, right? So let me post that in 1 sec. Shout out to Gus. Good to see you here, man. All right, folks. So any questions, just reach out. I put the contact there on the Zoom chat. It's great having you. What's up, Nancy? Good to see you. Vernice, Donald, Narinder. Yes, we'll see you guys soon there. We're in the live room with Matt. And thanks a lot for being here, folks. Appreciate your participation, your attendance. And for those that did join, just remember, check the emails and reach out if you do have any questions. Thanks a lot, folks. Have a great day.